the Australian property market is changing. I think a lot of people still haven't realized just how different this next phase could look. For years, almost everything went up. You could buy a fairly average property, hold it for a few years, and chances are you still made money. This market feels different. Interest rates are high, building has slowed down, migration is surging, rents are exploding. And while some areas could perform incredibly well over the next few years, I think other areas may barely move at all. So the big question becomes, what are the smart investors actually doing right now? Because the strategies that worked 5 or 10 years ago may not be enough moving forward. For those new here, my name's Aaron from InvestDoor, where we help everyday Australians with long-term wealth through strategic property investing. If you enjoy honest property education without the hype, hit subscribe and let's get into it. So I think one of the biggest mistakes investors can make right now is assuming the next decade will look like the last one. For a long time now, Australia had incredibly cheap money. Interest rates were low, borrowing power was strong, and property values climbed aggressively across many parts of the country. A lot of people got used to a market where growth did most of the heavy lifting. But today, holding costs are higher, mortgage repayments are higher, insurance costs are up, maintenance costs are rising, and borrowing capacity has reduced significantly for many buyers. And when conditions tighten, the market becomes far less forgiving. Suddenly, buying the wrong property matters a lot more. Because this environment, not all properties are going to perform equally anymore. Now, what's really interesting is that despite all the rate rises, the Australian property market hasn't collapsed the way people predicted. And honestly, I think that surprised a lot of people. But the reason is simple. Property markets are driven by more than just interest rates. Yes, higher rates can reduce borrowing power, but at the same time, Australia has a massive housing shortage problem. We've got strong population growth, low vacancy rates, and not enough homes being built to keep up with the demand. So what we're seeing is a really unusual event where affordability is under pressure. Housing demand is still incredibly strong. And that's why I think the market moving forward becomes much more selective. Instead of one giant boom lifting everything equally, we may see stronger separation between high quality assets and the weaker ones. I genuinely believe the supply issue is one of the biggest stories in Australian property right now. Australia simply isn't building enough homes. And it's not just one issue causing it. Builders have collapsed, construction costs have surged, labor shortages remain a problem, developers are struggling to make projects stack up financially. And in many cases, projects that looked profitable a few years ago no longer work at today's construction costs and interest rates. So what happens? Projects get delayed. Some never get built at all. Meanwhile, population keeps growing. More people arrive. More households form. More pressure get placed on rental and housing supply. And when supply can't keep up with demand, prices and rents usually come under pressure over the long term. That's one of the reasons many investors are becoming increasingly selective about buying in undersupplied markets. Now, this is where I think investors really need to pay attention, because I don't think every area benefits equally from these trends. Some locations have incredibly strong fundamentals behind them. They've got growing populations, infrastructure spending, employment opportunities, lifestyle appeal, transport upgrades, and strong owner-occupied demand. Those are often the locations where demand stays resilient, even when conditions become tougher. But then you've got other markets that are heavily oversupplied or heavily reliant on investors chasing cheap stock. And those areas may struggle a lot more moving forward. So this is why I always say cheap property isn't automatically good investing. Sometimes people buy purely based on price because they think cheaper means safer. But long-term growth usually comes from demand, scarcity, and desirability, not simply a low entry price. The next stage of the market may actually reward quality far more aggressively than quantity. So what are smart investors actually doing in this environment? The first thing I'm noticing is that people are becoming much more defensive financially. Investors are focusing more heavily on buffers, cash flow, and reducing their unnecessary risk. Because when rates are higher, financial breathing room becomes incredibly important. The second thing is asset selection has become far more strategic. investors are paying much more closer attention to vacancy rates, infrastructure, demographics, supply pipelines, and long-term demand drivers. People are asking the deeper questions now. Why would someone want to live here in 10 years? What makes this location scarce? What's driving the future demand? These are all the questions you should be asking as an investor. And honestly, those are all the right questions to ask. I'm also seeing many investors place greater emphasis on land value and owner-occupier appeal instead of just flashy investor marketing. Because at the end of the day, owner-occupiers often drive long-term price growth. Emotional buyers tend to push prices much harder than purely numbers-driven investors. Finally, smart investors are staying patient. They understand uncertainty creates opportunities, and the best opportunities often appear in the market where everyone feels uncomfortable, not when everyone feels confident. I think the Australian property market is entering a much more sophisticated phase. The days of buying blindly, buying almost anything and expecting incredible results may become much harder moving forward. But for strategic investors, I actually think this environment creates enormous opportunity because when markets become more selective, research and strategy matter more. And usually that's where experienced investors separate themselves from the emotional buyers. Now, I'd love to hear your thoughts. Do you think Australian property market is heading into another strong cycle growth? Do you think that we're moving into more tougher times ahead? Let me know in the comments below. And if you want to help build a property investment strategy designed for today's changing market, there's a link below to book a strategy session with the InvestDoor team. So don't forget to like, subscribe, and I'll see you in the next video.